Yeah, hi guys. Today we're going to do a SPY transaction. We're actually going to sell an iron condor, and an iron condor is just a sale of a call and a purchase of a higher call, and the sale of a put and the purchase of a lower put for the protection on that. And like I said, the SPY is nice. I like to do iron condors on SPYs because of the fact that you can do a little more technical analysis, and you can kind of determine trends a little. And I can go fairly far out of the money. Not as good as the rut or something like that, but those are highly volatile indexes. So I like the SPY. It's a little bit more controlled. And I just feel really comfortable. I had really good luck with doing selling iron condors on the SPY. So let's take a look. I like to do a little bit more analysis, technical analysis on the SPY than I do on some of the other indexes where I'm selling calendars. Only because if we are in a bull market or we think a bull market is coming, then I want to stay a little bit ahead of it. I don't want to stay in the middle of it. But I think right now we're kind of heading into this range. Now as I think I showed you on another CD, that we've got this channel going on where we've been in a channel now for several months, and it's been following this downtrend channel. And we've had a bit of a bull market here. We've run up a little bit. We've gone above this upper trend channel line, and now we're coming back down to it. I've created this little blue channel just in case we do actually start moving up from here. It's coming down to the bottom. Prices right now is around 132.51. It's coming back. It's coming down to this blue line down here. If that holds a support, this blue uptrend trend channel line might actually be the next trend in the SPY. So we're just keep an eye on that. Right now, it looks like resistance up here is pretty strong around 139. And remember that support. Okay, it was support right around here. Now becomes resistance, and it's been resistance here. It was resistance here, and it looks like it was resistance here again. So if the indexes can break through that, that's we could see much more on the upside. But the SPY right now seems to be holding into there. There are some very, very long-term channel lines here. Don't let all these lines confuse you. I'm just really taking it long-term channel lines. Let me go back a little bit. I'll go back here 20 years and show you what I mean. I've got these uptrend channel lines going back to later 2002. Now this is a monthly chart. But from 2002 you can see all the way up to the present 2008, we've been in an uptrend. Now we hit the upper trend channel of this very long-term 5-year trend channel line here back in October of 2007, and we've drifted all the way down to the lower end of the channel line, which is, what is that, March of 2008. We dipped below that channel line and then closed above it, and now we're kind of like in the middle of the lower 25 percentile here. It just kind of gives you an idea on a long-term basis what the market is doing. I mean, does that mean that was actually the bottom of the market? We don't know. If it breaks through this downtrend channel line here, which was set back in 2003, we could be in for a nasty little bear market. But like it was back in 2000 to 2003, that was a nasty little bear market there. The S&P, the SPY went from looks like about 140 down to 70. It cut it in half. So we're going to keep an eye on that. But these are monthly charts, so within a month, the SPY can move. The SPY moved between 137 and about 132. We're right down at actually at the lower end of our monthly chart here, which is about a 5-point range. Most of the months you can take a look at here let's see, this one went from 152 on the high, 153 on the high to 142, so it's about a 9-point range there. This one was 151.45, and I'm looking up here at these high and low figures when I hover my mouse over the price chart. This month was for June of 2007 and went from 151 to 145. That's about a 6 point difference, high to low. This month was May of 2007 and went from 150 to 144. It's about 6 points. Let's pick out a really big month. Here's a really big month right here. That was January of 2008, and it went from 146 down to 125. That was a huge move. That was about 20 points on the SPY. But the normal move is anywhere from 5 to 7 points. If you go back in time, this month, this was November of 2005. The high was 123, the low was 116. So it's about 7 points. So between 7 and 9 points is a normal range for the spiders over time. Now if we come in a little bit closer here, we can see we've been in this downtrend channel here since October of last year. We just kind of drifted down. We broke this uptrend channel line here, and now we're kind of going back down. Now, whether or not this trend channel line becomes it was prior resistance, whether it becomes support or not, we're kind of right on the edge of it. So we'll find out pretty soon. But in any case, if we do in fact have a 7 to 9 point range of movement in the SPY over the next month, then we want to plan accordingly. So we really want 5 points on either side. If we're going to do an iron condor, we want 5 points at either side of the current price, which is 132. So if we can get anything up above 137 and anything below 127, I think we'll be in good shape. Of course, adjustments, depends on the market conditions. Adjustments can and will be necessary. You can see here, this 30-day period here, it went from market. This is the January move. We're about 25 points or shaving off of the SPY here. So that was a pretty heavy move there. If you were in that move, you would have definitely had to do some adjustments once it approached your break evens.